Alrighty people, welcome to SirToshi's News. Today's date is Monday, the 6th of July 2022. Without further ado, let's just jump straight into it. BuyBSV.live, the best place to buy Bitcoin SV online. The original protocol and genuine Bitcoin. Right, let's have a look at these articles then. Let's run through a few. So this one here, I quite like these Cointelegraph articles. It says crypto 401k, so that's retirement planning. Sound financial planning or gambling with the future. This sounds absolutely reckless to me at the moment, but that's why we're going to read it. Cryptocurrencies may be coming to Americans' retirement plans. Some see it as a sound financial strategy, while others remain skeptical. Oh my god, the entire market is pumped by Tether. Literally, there is no economic value in it at all. It is absolutely outrageous. There is no utility. But again, we know the powers that be literally do not care about anybody's health or wealth, which is why they're probably allowing this to go ahead. Unbelievable. Well, no, actually quite believable if you know what I know. So it says here, in April, United States-based retirement plan provider Fidelity Investments, which is absolutely huge, managing trillions, but again, all controlled by the New World Order, so they wouldn't really care. So they've moved to allow 401k retirement savings account holders to invest directly in CoreCoin BTC. Again, that's the SegWit protocol, so it's had the digital signatures removed from the transactions, so it just means it can't ever be used as money, so therefore the data has literally no economic value on it whatsoever. They've also reduced the block size to 1 megabyte, so it can only do 7 transactions per second. So when queues can be formed, it means it can be manipulated. They've also developed a second layer on it to starve the miners. It's absolutely tragic, but again, that's why they're doing this. They're going to absolutely screw people. So it says the flagship cryptocurrency, again, yeah, it is a cryptocurrency because cryptocurrencies are economically worthless, absolute pieces of crap. You need a digital commodity, and data can only be commoditized one way, and that way is outlined in the Bitcoin white paper. And Bitcoin now has the ticker symbol BSV. So making crypto a potential part of one's savings for the future. Absolutely outrageous. Absolutely outrageous. A 401k is a retirement savings plan offered by many US employers that give the saver tax advantages and allow for several different investment options. Fidelity's move will make it easier for CoreCoin to be amongst those options. Unbelievable. In a typical 401k plan, employees agree to have a percentage of each paycheck paid directly into an investment account created for the plan, while employers often match part or all of employees' contributions. Fidelity is the largest retirement plan provider in the United States, and its BTC rollout will make cryptocurrency available for more than 40 million employees. Again, it's just a price pump. Literally, they do not care. This is outrageous. You know, first of all, they pump it with Tether. Then they realize that they can't get away with pumping too much with Tether because people are like, hold on, how much Tether are you printing? Where's this all coming from? So now they're using people's retirements. It's absolutely outrageous. Outrageous. I'm fuming, but you know, I have to try and keep a head on it, really. Assuming their employers decide to offer it, investors who take advantage of the initiative could effectively become tax-advantaged long-term BTC hodlers, removing coins from circulation every month. Yet, no, not interested in utility whatsoever. It's just literally, unbelievable. You know, it's a price pump. It's a price pump plan by the New World Order who do not care about anyone or anything except themselves. The company's plan limits BTC allocations to a maximum of 20% and allows companies to make the threshold even lower. Offering cryptocurrency points for 401ks isn't new. However, in June 2021, another retirement plan provider, For Us All, partnered with Coinbase to offer BTC exposure to its account holders. Oh my goodness. And we already know that Coinbase has taken out a loan from Goldman Sachs and they've posted over $400 million losses in quarter one. Oh dear, oh dear. You wouldn't want to go near Coinbase with a barge pole, and yet they're going near them with retirement funds. Unbelievable. For Us All even recently filed a lawsuit against the Department of Labor and Security for a Labor Marty Walsh in the United States District Court for the District Court of Columbia, seeking the withdrawal of a compliance assistance release. The release states that the department's Employee Benefit Security Administration will conduct an investigation program aimed at 401k plans that include cryptocurrency. Speaking to Cointelegraph at the time, Forusol CEO Jeff Schulter said the government was trying to restrict the type of investments Americans can choose to make because they decided today that they don't like a certain asset class. Absolutely outrageous. Absolutely outrageous that they know that BTC is a security offering. Questions of a government overreach aside, it's also important to consider whether including crypto assets in a retirement plan is a good idea. The Bitcoin network has been around for over a decade and has outperformed every other asset class so far. But as many analysts will say, past performance does not guarantee future results. Caveat emptor there. Crypto volatility and 401k plans. Considering that Bitcoin, that's CoreCoin, and crypto assets in general are recent financial experiments only a little over a decade old, some investors may find digital currencies too risky. Cryptocurrencies can be highly volatile, and their value has been known to plunge by up to 80% during bear markets. Something that could prove disastrous ahead of someone's retirement. Yeah, too right. While employees aren't forced to withdraw from their 401k plans when they retire, the point of the money being there is to provide them comfort during their sunset years. Waiting for the market to recover or simply accepting such significant losses could be devastating. Chris Klein, co-founder and chief operating officer of CoreCoin IRA, a cryptocurrency-focused individual retirement account provider, unbelievable, told Cointelegraph that there is a growing conversation around the adoption of digital assets and their growing use case. Klein pointed to Senator Tommy Tuberville from Alabama, who recently unveiled a bill, the Financial Freedom Act, that seeks to allow Americans to add cryptocurrency to their 401 retirement saving plans. Absolutely, unbelievably reckless. According to Klein, part of the retirement crisis we have in this country, the US, is due to lack of participation in 401ks. He added that such moves could be a way to get newer generations engaged through their employer-sponsored plans and help Americans retire while testifying to the resilience and relevancy of crypto assets. Klein added, crypto is certainly volatile, but its resiliency and relevancy in its short existence are remarkable. Having at least some exposure and, more importantly, experience in crypto is becoming paramount to modern investing. Experience in it. What do these people know? Absolutely nothing. Cryptocurrencies could have the same disruptive impact on money than the internet had on communications or that email had on post offices, Klein stated. Speaking to Cointelegraph, Scott Merkler, a cryptocurrency influencer and the host of Wolf of Wall Street podcast, noted that every investor should have at least minimal exposure to CoreCoin, oh my goodness me, with ETH and another crap coin security offering, a second possibility worth considering. According to Merkler, even a small allocation of these assets potentially offers idiosyncratic risk and the opportunity to invest in an asset that can go up when everything else is dropping. Merkler added that the crypto market crashing ahead of retirement might not be the biggest concern, saying any market can crash ahead of retirement. So this is not a concern specific to CoreCoin. Investors in tech stocks right now are largely underperforming crypto in their retirement accounts. Yeah, but again, well, yeah. Who knows? The entire market's manipulated by US dollars, centrally controlled, another security offering. Merkler added that investors should be allowed to invest in any asset they prefer for their retirement, but again, regulators should have done their due diligence on these pieces of crap that they're talking about, including that while self-directed IRAs are popular for this reason, 401k holders haven't yet had such an option. A volatile asset class for diversified portfolios. Over the past few years, more and more people have come to consider cryptocurrencies as an investable asset class, with demand clearly present for retirement savings. In a survey conducted by Investopedia, 1 in 4 millennial respondents reported that they are already using crypto to help fund their retirement goals. Employers, however, still have their doubts. The Plan Sponsor Council of America recently surveyed its members, which are employers sponsoring qualified savings plans, and asked whether they are considering adding crypto to their investment options. Only 1.6% responded affirmatively. Speaking to Cointelegraph, Daniel Scratchman, managing partner at A&C Advisors and an independent trustee of the ARCA US Treasury Fund, said that cryptocurrencies are nevertheless something that a diversified portfolio should include. Unbelievable. According to Scratchman, an individual's level of exposure to crypto assets should depend on several factors, including age, income, and other assets and more. To him, it's all about investor education, as if he's got any. And there needs to be significant information content and educational programs available to investors regardless of the size of their assets. Again, all going to be absolute bollocks. Listen to Safer Demazan, whatever his book is, the Bitcoin Standard, absolute bollocks. And then the other one, Andreas Antonopoulos, something like something in Bitcoin, something to do with learning Bitcoin, whatever. Absolute crap. There's no common sense information in there whatsoever. Carmen Collins, an investment analyst for Verity Funds, a company offering crypto and cleaning energy investment solutions, echoed Scratchman. He told Cointelegraph that sound cryptocurrencies like CoreCoin, oh dear, are great investments and deserve a place in the 401k plans. According to Collins, meme coins and scam tokens with no fundamental value, such as CoreCoin BTC and Ethereum, do not deserve a place in these types of investments, and policymakers, along with investors and plan administrators, should be made aware of this important caveat. Cryptocurrencies, he said, offer extreme upside potential, but lack investor protection, which can be a significant drawback. The upside potential may, however, be all an investor needs. Giving prudent managers some more opportunity, having more options, again, to get commission from these retirement funds. Oh my God. Having more options to invest across different assets, including cryptocurrencies, may give a prudent manager more opportunity to optimize that long-term rate of return, according to Thomas Perfumo, head of business operations and strategy at crypto exchange Kraken. Oh, surprise there. Speaking to Cointelegraph, Perfumo noted that retirement is often associated with low risk. Yeah, just like the mortgage-backed securities were given AAA ratings, and then we had the mortgage crisis. Unbelievable. His heuristic misses the market as $1 compounding over 30 years at an 8% rate will grow to surpass $10, while the same £1 compounded over 30 years at 6% rates grow to $5.74. According to Perfumo, optimizing that rate of return over the long run is how an individual builds wealth, overcomes the burden of inflation, and ultimately accrues enough to retire comfortably. Perfumo added, risk tolerance evolves over a person's lifetime. Someone closer to retirement who may already have a significant amount of savings will likely have a lower allocation to risk on investments like cryptocurrency. He added that conversely, individuals at the start of their careers have more capacity to take on risk and will likely allocate more of their capital towards risk on assets. The potential downsides to adding crypto to retirement investment plans, Perfumo said, involve fiduciaries failing to act in the client's interest. Yeah, by actually knowing anything about it. By rushing into a risky product, this is so hypocritical, or misallocating their client's capital relative to their risk profiles. On the other hand, someone who wishes to manage a self-directed retirement portfolio should have all the available options at their disposal, so long as they are informed of the risks. Adding cryptocurrencies to 401k plans means adding tax-efficient investment opportunities for investors looking to hold onto their assets for an extended period of time. As with any other financial decision, the choice should be adapted to investors' risk profiles and should be made after thorough research and help from advisors if necessary. What do advisors know? Honestly, they're all shitcoiners. Cryptocurrency investments do not match everyone's risk profile, nor should they. They are voluntary, but they might be highly beneficial to investors who thoroughly understand the risks involved. Yeah, nobody understands the risks involved because no one understands it at all. They should be listening to my show. Yes, indeed. Got 14 minutes. That was quite entertaining, actually. Might leave this one for next time then. Let's have a quick look at Twitter. So just a point here today from News on Chain saying on April 26th, 2011, Bitcoin creator Satoshi Nakamoto, aka Dr. Craig Wright, sent his final emails to fellow developers in which he made clear he had moved on to other projects. Those other projects were blockchain IP. Now we know. Let's have a quick look at the charts. Look at that. Look at that. All these positive green candles going up. Honestly, the price is just ridiculously suppressed, you know. But we all know that anyway. So we'll leave it there as ever. Be aware, take care, stay safe out there, and I'll see you in the next one. Catch you later.